Now, if there's one thing that has continued to dominate conversations since the new year began, is the Nigeria Tax Act 2025 and related laws signed by President Bola Ahmed Tinubu in June 2025. These reforms consolidate multiple outdated laws, streamline compliance, expand the tax base early, and most importantly, introduce a comprehensive list of 50 exemptions and reliefs specifically designed to protect and benefit low-income earners, average Nigerians, small businesses, and vulnerable groups. Yet, as with any major change, reactions have been mixed. While many celebrate the reliefs, others express concerns over implementation challenges, potential confusion in the early days, or fears that not everyone will feel the benefits immediately. Now, to help clarify the facts, address the misconceptions, and explain these changes in practical terms, we are delighted to have in the studio seasoned expert, Mr. Edwin Nwoko, managing partner of Nwoko, Edwin and Co. Chartered Accountants. He is a fellow member of the Institute of Chartered Accountants of Nigeria and associate member of Chartered Institute of Taxation of Nigeria, and currently serves as Vice Chairman of the FCT Tax Practitioners Association. You're welcome to Business Express.
Thank you. It's my pleasure to be here.
Now, to begin the conversation, I think we'll start by you clarifying. There's been this conversation about if you earn around 800,000 naira annually, you'll be somehow exempted. Can you break this down for us? What does that actually mean?
Okay, it's a beautiful one. It's a good time to know that this country, Nigeria, is actually thinking about the most vulnerable in our country. Now, what this means is that those who earn minimum wage, say 70,000 naira, all right, they will not pay taxes. It means that they are outside the tax bracket. If you look at the tax law, you will discover that they specifically stated in the relevant section.
So, sorry, you said those who earn minimum wage. You mean those who earn 70,000 naira has salary? Is that
as salaries? That's correct. So whoever earns 70,000 as salary, that translates to about 840,000 naira. Now, if you look at the new rate, because the Act provided us with new rates for under the PIT, the 800,000 is clearly exempted, 0%. So with the reliefs given, bringing those reliefs, you discover those people who are vulnerable, earning about 70,000 naira, do not have to pay anything at all. At any rate, the Act itself clearly states that those who earn the minimum wage, which is 70,000 in Nigeria, are exempted from paying payee or personal income tax in Nigeria.
So what about those who who get their monthly salary above that 70,000 naira? Does that mean their tax will increase this year?
If you look at the position of the government, the government decided that they don't have to tax poverty. So what they wanted to do, and that's the intention of the government, is to make sure that people pay less taxes, except for those at the very high income brackets. But for those who are the low income earners, they are not paying more. Example, if you earn about 100,000 naira monthly, that translates about 1.2 million naira in a year. Given the reliefs and all that, the person is not likely to pay taxes because those reliefs are given, and that will bring your taxable income to about 800,000 or below that. But for those at the very high income tax bracket, of course they will pay.
So I think we need to specify low-income earners, because somebody who earns 100,000 naira is also a low-income earner.
Yes.
So what happens to him?
That I would just say that those who earn, someone who earns 100,000 naira, I said that amounts to 1.2 million naira in a year, right? So if you give such a person the reliefs provided for in the Act. The reliefs are clearly stated. We call them eligible deductions. When they are given, something like individual contribution to National Housing Scheme, Health Insurance Scheme, National Housing Fund, Pension Reform Act, the contribution under that, and some other stuff. Rent relief.
This thing is not supposed to be part of your salary. I thought they are part of they are a component of your salary. They just need to put it aside.
No, they are not. You see, if you look at
so are we talking about basic salary? Oh,
wait, we need to clarify because that's where people get confused. All right, the Pension Reform Act clearly is clear about this, that people are expected to make contribution to the Act. And what are those components? You have the basic salary, you have the transport and housing. Those are the components that are taken into consideration in computing the pension, all right? So now, once those are taken out and the computation is made, the amount you arrive at as your pension contribution is removed before the termination of your payee. So that is how it works. Unfortunately, people don't understand it. They tend to argue that it amounts to double taxation. No, that is not correct. The amount you contribute as pension is removed first before your payee is computed. So, and that means that you are not paying tax on that pension contribution. It is remitted to your pension contribution, remitted to the PFA, and it stays there for you, where you can access it on retirement. So it means that that amount is given to you by the government and it is not taxed. And it's important we understand that. It's very clear.
Okay, on allowance deductions and reliefs for individuals, contributions to pensions, health insurance and housing funds are deductible, along with interest on home loans and even 20% rent relief up to 500,000 for typically, or how do I even say, for a typical family in Abuja paying 1 million naira in annual rent. How can they claim this to lower their tax bill? And what about life insurance premiums? Do they need specific documentation?
Yes, that is correct. Tax generally has to do first with the law itself, and the law provides conditions on which some claims can be taken. Something like the rent relief we are talking about, whoever wants to claim it will have to make sure that the necessary document is in place, and that has to do with your rent agreement or your rent receipt. It is that is the document that we provide evidence to the relevant tax authority that you actually paid rent, and then they will compute the amount of relief based on the provision of the law, 20% of the annual rent paid, capped at 500,000 naira. But for you to enjoy that, the law clearly states that you have to claim it first in writing, and of course, in claiming right, you have to attach the necessary document. The same goes for other reliefs that you have there. For anyone to be claimed, Section 30, Section 3132 of NNA 2025 clearly states that you have to provide the necessary document. That's the only way the tax authority will be able to verify your claims and give them to you. In the absence of that, you are not likely to enjoy the reliefs.
Okay, pension and gratuity are listed as exempt if granted under the Pension Reform Act. Does this mean someone retiring after 35 years of service pays nothing on their gratuity? How does this benefit the ordinary civil servants?
Very good one, very good one. It means that on retirement from service, the government is trying to make sure that, first of all, they have financial stability. That amount is not going to be taxed. It is to enable the citizen who retire from service to be able to still afford the basic needs of life. So on retirement, that amount is made available to the retiree who now becomes a senior citizen. And the government wants the senior citizen to be able to enjoy the basic needs of life, at least
You
be able
say
to.
what amount? You mentioned amounts.
The amount.
Okay, it's like you mentioned amount. Let me understand, because we need to be very clear about this issue.
No, I did not state.
Okay.
What I said here is
That
very.
he's
clear.
exempted
He's
because he needs
exempted
to.
once the person retires from service. He has access to his gratuity. It is made available, and once that is paid to him, he doesn't have to pay tax on it. And the reason is not far-fetched. Government is trying to make sure that they at least are able to live comfortably. They have financial stability. And perhaps they want to engage in one or two other things. They have the money to take off with. That is just what the government is trying to make sure of. And it's a good one.
Okay, let's talk about capital gains tax exemption. The sale of an owner-occupied house is tax-free. Let me get this straight. If I sell my personal house that I've been living in, I pay no capital gains tax at all. What about someone who inherited a property and now wants to sell it?
Now, we need to understand something. For somebody who inherited a property, that's by inheritance. So once that is going to be, the person did not pay for it, all right? So having that understanding, if the person eventually decides to give it to somebody else, there still won't be any tax, all right? But once that person decides to make a disposal of it and make gain out of it, then tax will apply. So that is how it works. If the property is inherited, given to you, or it's by way of gift, you decide to give it to somebody else as gift, there won't be tax. You are not going to pay anything. But if you decide to sell it, you dispose of it, and you make gain on it, government expects that tax will be paid on the gain.
Okay, does the law talk about those property we see around Abuja that is hardly rented out? Probably maybe because of the high cost of rent. What does it say? Are those properties to be taxed as well?
That the issue here is also simple. For those buildings that they have out here and there, we are talking about property tax now. And that is something that the government is actually going to have to look at very well. You have houses in Abuja, some estates where you have buildings not disposed of by certain individuals who got money, built these things, and just kept them there. For whatever reason, they're not rented out. It is something that government is looking at, and for individuals, of course, you know that it is the FCT IRS that will have to be involved at different state levels. So where those, I know that something is being done in Lagos State, and I'm sure where they have some states have domesticated these laws, and they're looking at the issue of property tax. Where those buildings are there, they are not rented out, the owners will be made to pay applicable taxes. And so I think they are working on that. But at the federal level, they seem to be quiet about it for now.
Okay, in your own analysis, would you say that this is the best we can have? I mean, when you talk about the tax system that redistributes income, does this redistribute income? And then also, I would like you to comment on the issue of accountability and transparency, because most of these resources goes into the hands of people who will now invest in public. What happens if they fail to invest in the public?
Okay. Well, these laws, let's go back a bit. The reform committee that worked on this is made up of Nigerians. Nobody came from outside. And they looked at the issues around Nigeria. They worked assiduously to ensure that they look at those things that are beneficial to the citizens of this country. So for now, I think it is the best that has happened to this country. The government saying that they don't want to tax poverty, they want to tax wealth, and to encourage people to be able to formalize their businesses, all right, and be able to create, when they formalize their businesses, they make more income, and they eventually become taxable. That will help the government to also generate revenue in the future. So it is a good thing, and then all well-meaning Nigerians should do well.
Does that redistribute income?
Continue to support them.
Does that
now,
redistribute
in the income
and
issue of this, when the tax,
the gap between the rich and the poor?
when the rich, if you look at the focus right now is on taxing the very wealthy in the society, the big ones out there. So when money is taken from the rich and used to provide for the basic needs of the vulnerable in the society, I think that has to do with wealth redistribution. If money is taken some is taken from the rich, taken from the bigger companies, all right, to boost the economy and then provide for the basic needs.
Okay, let me quickly ask you this question.
It will help to redistribute income.
Let me quickly ask you this question. If the big corporations are meant to pay more and they provide goods and services, what stops them from passing that incidence of tax to the consumer? And is there any mechanism that addresses that?
This is a very critical question, and it will take us back to issue of government putting mechanisms in place to checkmate some of these things. What you are talking about now is the issue of passing the burden eventually through price increase and all that to those that the government is also trying to protect. But then that is why the government has to look inward and look at the possible of control mechanisms to be put in place to ensure that the very vulnerable are protected in the country. I remember those days we used to have a price control board and all that. Now that was in place to check the issue of price increase and stuff like that. Okay. So we hope that government is able to initiate things like this to control. Okay,
Mr. Godwin, I'm afraid we'll have to put it a halt there because we have need to look at what the global market is about right now. Mr. Edwin Nwoko, it's been a pleasure talking to you.
Thank you very much.